Let's start with Vikas Khemani, whether he shares all that excitement about the market also or not. Vikas, hi. Good to have you in the show. And Vikas, let's start off with that one bright pocket today, because the festive season, at least going by both, Hyundai and Maruti's commentary, fingers crossed, seems like it's off to a good start.
Absolutely. I think automobiles being, both beneficiary of GST rate cut, interest rate cut, and also in general with the low base effect, has to be, one of the biggest beneficiary. And I think that there's not too much competition. There are consolidated players. So players who have good models lined up to capture the festive season and this right timing are benefiting. So I think automobiles, we've been quite positive.
That said, Vikas, uh, from an investment perspective, are you recommending adding any of the other GST beneficiaries, white goods, staples, etc.? Anything else within the consumption pool which is looking good after the GST rationalization?
So we keep looking for idea. There's no doubt on that. I think consumer durables, I still find, you have to play on the valuations comfort. We don't have much valuation comfort. I mean, how do you buy a consumer durable player who also might be beneficiary of interest rate, but it's available at 60p, 70p, and yet hope to make money? Whereas I don't see any difference between the structure of the sector, whether it is consumer durable or automobiles. So I would rather play that through automobiles than consumer durable just because of the risk reward. If you see very interesting similarities in both sectors, consumer durables also have each of the product category have three, four players, and same thing you will find in automobiles. Very much same beneficiary of the same cycle of under penetration or interest rate cut or rising per capita income. So I find that this is far better risk reward than consumer durables.
Okay, Vikas, hi. Want to get your sense on the entire IT pack, because the last time we interacted, you did say that you were expecting to see early teen returns from large cap IT. And now with this entire H1B news coming in from the US, where do you think this number could head?
I think so. See, I think with the post clarification, H1B is only incremental. So to that extent, I don't think it's very, very significantly negative. Any news, see, if you see in last many years, a lot of offshoring has gone up. IT companies have hired a lot of local people in US. So it's not very big dependent. Tomorrow, let's say, even if these companies have to bear the increased cost of visa, the margins could be to the extent initially 20, 30, 40 basis point. But more importantly, they will pass on to the customers. So I think these are the things which, initially are, in my opinion, thankfully, it's not on the existing pool of the visa holders. So to that extent, I'd say it's quite immune. And anyway, incremental growth was not necessarily coming from people going there, but also more from offshoring and using AI tools and digitization. So I think in that sense, I don't find it big, very very big negative for, and that's the reason you will see IT sector has not respond. I mean, like, fallen significantly, and we have, I think for us it does not change anything significant. The drivers of the IT sector continues to remain same as they were before.
Because you think the derivative, that is the GCCs, although the listed opportunity may be quite small right now in India markets, you think that could be the big trend to follow on to?
Yes, GCC has been a big trend, irrespective of what has happened on H1 visa. If you see, every year we are having 100 GCCs coming about. If you go to Hyderabad, Pune, Bangalore, and even in now smaller cities like Indore and all, you are beginning to see global capability centers getting built. So that trend has been irrespectively, on rise, and I see no reason that kind of slowing down. Yeah, of course, you can't rightly said you can't play directly. You have to play only derivatives of that. But yeah, but at the same time, from a job creation perspective, that continues to be one of the very big, opportunity for India. And it's not only necessarily in the IT sector; it is even the manufacturing companies are setting up their GCCs, and so it's quite widespread.
Because other than that, if I just look at the index, we've done nothing really and just been beating around in a very, very, tight range, if you can call it that, for many months now. Why is there so much push and pull in the market?
See, we last year we had a great run in the market. We had a great run in the market for last many years, and to some extent, I think valuations got stressed last year, which was followed by a little bit of earnings slowdown, led by liquidity squeeze and government spending reduction, which both got corrected in this year. interest rates came down, liquidity got addressed, government is spending, the GST cut has come, income tax rate cut has come. So there are lots of positives which are there, from economic perspective. There's nothing macro level, disturbing at the country level. Now, when valuations were slightly, elevated, I think you had a time correction, which itself corrects the valuation as well. So we have seen excesses got corrected in last, 12 months. We have seen, stocks which were undervalued have done well. So this is a typical readjustment cycle of any market after having such a large rally. So in my opinion, good news is that market did not fall despite all the worries, as much as, of all the count, including, we had, Operation Sindoor, we had tariffs. None of them impacted Indian markets significantly negatively. And that shows the kind of resilience we have, that shows the kind of macro stability we have in an Indian market. So this kind of consolidation are always very healthy for the markets, and they have happened in the past as well, and they will continue to happen in the past. Markets never go up linearly, so hence I never get worried when markets don't do well anything in 6 months or for a extended period of time, as long as there's nothing changing fundamentally.
Oh, yeah, absolutely. And it's the retail money and the domestic liquidity which has also held the market up. And that really speaks a lot for itself at the time when FIs have just not been buying India. But other than that, Vikas, just wanted to understand, while the real impact of the GST cuts is only going to come in a quarter after, earnings, the one reason because of which the market got into this, range-bound movement, what is it that you are anticipating from the quarter which is coming up now?
I think, this quarter probably people will be quite understanding. Markets are always forward looking this quarter, even if you have some sort of disappointment because of this pushed sales on or delayed sales. Because after announcement, I think the sales kind of halted or they slowed down, not halted. So that might have some impact, though I guess the 10 days, it has the 10 days period to cover it also. So I would not be as pessimist. So I don't see major disappointments coming into the earning. But even if that were to happen, I don't think market would be ignoring that. It is always, seeing forward, and market would say that probably that sales would get spill over to the next quarter.
Vikas, just wanted to have your take on pharma as well, because we do believe that you are positive on the pharma space overall. But just like IT, Vikas, this whole H1B visa thing came in as a surprise. And for pharma space as well, we keep hearing from Donald Trump saying that he is looking forward to lower the prices. And in the latest, he's also talking about the Ozempic prices to be slashed further. What's your current take on the pharma space as an investor? How should one play the theme?
I think probably it's a slightly misunderstood concept when he says, I think, when he's saying he wants to bring down the prices down, that is more for innovative drugs. And, most of the Indian companies are doing only the generic drugs, right? So, and they are anyway far, far cheaper than anything else they can manufacture in US. And India accounts for almost close to 40-45% of the market share in US medicines and generic space. So, and it's not that Indian pharma companies are making some obscene margin from the, selling in generic space in US. So even if they were to sort of tomorrow, and the fact that they've excluded pharma clearly shows that they know that there's no much scope for that, and it can have impact on their healthcare system or, overall, availability of medicines in US. Hence, they've excluded that. And even if it were to come, I'm sure, Indian pharma companies will pass on that to that. I think regarding tariff, I was only one say that people think that it's a tax on India. It's not a tax on India. It's actually a tax on, US consumer. None of the, whether it is pharma or any other sector, make more than 15-20% margin. So if they were to pass on entire margin, still US consumer will have to bear those extra tariffs. So, I'm sure they will have to keep in mind the sensitivity of their own sector. And hence, I don't think pharma would be, in my opinion, covered. If at all they do it, it will be bad for their consumer. There might be temporarily some sort of impact here, but I'm sure it will get over.
Okay, so that's the take coming in on pharma. An interesting point there you make about tariffs being a problem for the US consumer more than it being a problem for the world. But Vikas, thanks once again for joining us, and great speaking with you this morning.
Thank you very much.